Okay, good afternoon. Welcome to the weekly take on the market. Today is Friday, May 10th. It's around 2 o'clock Pacific time. Market is closed. I will be your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here at Investors Business Daily. Please take a moment to read the disclaimer. It's important. I can't tell you what to buy, how much to buy, when to sell, how much to sell. Fall under a compliance umbrella. I'm not licensed to do so. Nobody at IBD that I'm aware of is licensed, but we are like clients. I think I've mentioned that before. I use these products to make decisions on my own investing capital. So we've got skin in the game, so to speak. We'll do the same routine: overall market thoughts, stocks to watch, industry groups, and then the quote of the week. I don't have much this week. I feel like the market was pretty quiet. I guess we'll let the indexes do the talking. There wasn't a lot going on, and so I didn't come across too much. I do like this screenshot I found. Hedge fund top holdings, and again, I must the paste of the source. It's gosh, I hate to I apologize, but I hate not to have the source. I just don't think that's fair to the person who did the work. Um, Eric from YWR is a Substack. Where I got this. Um, Most consensus stocks: Amazon, Microsoft, Meta, Nvidia. You get the idea. So uh, these stocks are heavily owned, and it's both good and bad. They're heavily owned for a reason. But Bill coined the term. I'm going to give him credit. Maybe he took it from somebody, but overowned. So these stocks are, in my humble opinion, a bit overowned, especially across the top. And that's probably why like Meta got hit so hard on earnings, and Nvidia's made a huge run, and it looks okay, it looks fine, but could need to go sideways for a while because if I just think if you're a hedge fund, if you don't own Nvidia, if you hadn't owned it by now, I was like, what are you waiting for? You watch it go from 200 to 900, and then you're going to own it. Uh, Seems unlikely. So there's the incremental, the new buyers. Just a little, where's that new buyer going to come from to take all that Nvidia off their hands? We'll definitely pull up Nvidia, of course, but they've got earnings coming up, which should be interesting for the market. But this is not unusual as an instant. These are these hedge funds are big. They need liquidity. So when you need liquidity, you're kind of there's only a handful of names that you truly can kind of go to and trust. And I don't know the number, but in the last number of years, we've lost a lot of public companies. A lot of these companies that are private just stay private much longer than they used to. Just if from a selfish standpoint, I hate because these are IPOs, potential new companies that I could invest in. I can't invest in the when they're private. So hopefully we can get some more potential names going forward. I really like the IPO market to pick up the pace. So let's go to the indexes. I think this is all I had for as far as slides. And I'm going to turn my camera off so that you can see the chart better. And here's the NASDAQ. So yeah, look at this. Just super quiet last 2, 4, or 5 days. Good day, nothing. Good, nothing. Okay day. And today is kind of a nothing. It started off okay. I think there was some economic news that that maybe hit the market, and the gains in the morning got pushed back. So there's not a whole lot to say about the markets above all the moving averages. I don't know how you can be bearish here. let me say that more clearly. I don't know how you could be bearish here. Maybe you're not wildly bullish. That's fine. I could get that, but it's just I just don't see anything bearish about this. I don't have a single short. Normally I do like to have at least something on, just probing, looking for weakness, counterbalance to my portfolio. And maybe it does this because I don't have any shorts on. That's possible. But I think if you're bearish, you really want, and I'm going to guess most people aren't, but I think if you were bearish, you'd want it to kind of go up here and then come back down. So that could be like a divergence. So if we got I moved to new highs on the NASDAQ, but then the S&P, gosh, it's just so close. It would seem highly unlikely that it wouldn't do that as well. But maybe some type of divergence. So like the S&P goes to 552.70, and then goes back down, but the NASDAQ does not go up here. Again, it's just so close. It seems highly unlikely for that to happen, but that would be like a negative divergence you could get. So I think a push to new highs, and it would be interesting to see that if we probe for new buyers, if it could create new demand for markets. Like it will once, like, so here it did for a little bit and then it failed. Here it was really good. And then here, or if you really want to go here, very powerful. Here, very powerful. So usually a push to new highs there's like a pocket of air pocket where the demand will either come in because the people that aren't invested, they want in, or there's no demand at those higher prices, and then it kind of air pockets the other way. Now, I just don't have a lot to say about the markets. There's stuff to own. There's stuff acting well. It's diversified. There's different types of stocks and companies and groups you can own. So there's metals if you want that regard, or oil and gas stocks acting okay, and tech stocks, semis. Seems fun. Seems fun. I mean, the fly in the ointment is the bond market and the Fed, and everybody talks about that. So I guess if you are watching the bond markets, they're not all that great. I don't know a ton about the bond market. I've sort of kind of in the last couple of years started to really be more watchful of that, because interest rates are like real now and you can get like 5% on your money or something. So I have for the first time in my life been buying bonds in like the last 18 months or something. Not, here and there I'll buy a bond. I got some cash. I feel I don't need that I'm in an IRA or something. I might buy a bond, but it's just kind of interesting how one thing I'll say is that you can get a yield, and a lot of people are excited about it and running to it. I know that TLT had like a lot of inflows, but the yield keeps kind of going up, right? The opposite of this. So, and the fact that I'm buying bonds probably means that interest rates are going higher, because I'm so excited about 5% because we've had 0 or whatever the number was forever. So it's going to affect the stock market, right or wrong. You kind of have to have one eye on it. But the Bill O'Neill philosophy is, he would never look at this. And so if it was going to affect the stock market, you'd see it in the price of the stocks. It'd start to go down. So you can just kind of watch there if you want, if you're not that interested in this whole kind of macro setup. So S&P, NASDAQ, let's go like emerging markets. Not quite. Well, I would call that a pretty good high. It's been an underperformer for a long, long time. Is this going to be real? I don't know. I'm hopeful that it is, but it hasn't done a lot it hasn't done much for a long, long time. So like emerging, this is the 2008 top, and emerging markets did really, really well back then. And so you're not even close. So it's at 60. It's been in, I don't know if you'd want to call it a 16-year bear market, but 16 years of nothingness. Now, what happens when you finally come out of 16 years of nothingness? Maybe it wouldn't go up as much as Microsoft because it's one of the greatest companies in the world, but there's something to be said for when you kind of come out of a really long consolidation, and probably the time to buy Microsoft was really coming out of this high, like a '07 high. So you have not only a 15-year bear market, but you've got like this 7-8 year period as well. So that's what I always I like to look at monthlies to kind of get that perspective. And I do own emergent EM and EWJ, which is the Japan ETF. It's okay. I do own this coming out of this here. It's come down a little bit. It's hanging in there, but so same thing monthly, like done nothing forever. So there's some emerging markets that and other developed markets which are shaping up, which could be interesting going forward. But the best place to be has been, U.S. stocks, the S&P, the NASDAQ, etc. All right, so let's jump to industry groups. I don't think I have anything else as far as the indexes. And let's go ahead and rank them. And number one is computer hardware peripheral. That's SMCI and Dell. Building maintenance and services. Number two, I can't think of a stock that I would own there. Food and dairy products. There's only two stocks, so it's hard to get a good gauge on that. But I think like Vital Farms has been done really well. I wonder if that's in that group. Well, why wonder, Scott? Why don't we find out? Stocks and group. No, it's gosh, a couple of ADRs and Lifeway Foods. On a side note, it's a good segue. We have a team of us: Chris Gessel, myself, Justin, Mike, et cetera, all the team. Ken, Ed, David, Ali. I could go on and on. We are working to, for lack of a better word, update the groups. So trying to get away from two stock groups. Maybe we have to move this to just food products rather than be so specific with dairy. 20 years ago, maybe there were 12, 14 dairy stocks, but like I talked about the number of stocks shrinking, that maybe there's a big consolidation in the group, and XYZ bought ABC and DEF bought GHI, and it's just whittled it down. So we want to make the groups reduce the number. I don't have a magic number. I don't know if it's 170, 150, 100, probably something in between 197 and 100, but make the groups more relevant, more up to date with the current market environment. Software database, building, heavy construction, transportation, gold and silver, transportation, shipping, steel. And you can see how kind of eclectic this is. Banks, foreign, the Argentinian banks have done really, really well. Restaurants, there's all kinds of different types of groups to power equipment. Where are the semis? I haven't even seen the semi one yet. Way down here at 35. So I like the makeup of the groups. I like the fact that it's not all just software, or it's not all just crypto or something like that. It's very, there's something to, I think if I looked at my portfolio, I feel like I own maybe one stock. I'm sorry, maybe two stocks that are in the same group. Other than that, I think I own 8 stocks, and they're 8 stocks in 7 groups, I think, is the makeup. Just doing it off the top of my head. It's very, very different. I don't have to own, 5 software stocks. Sometimes that's the case. I don't, if that's the case, you kind of do what you do. I know one time LinkedIn and Facebook at the time were in one group, and I had big positions in both, and so I literally was like more than 50% in a single group, and thought, it seems a little bit over my skis, and so I reduced the Facebook. Of course, it was turned out to be the better than LinkedIn one, but that was kind of the what I remember that story being, really heavy in one single group. And that was a while ago. That's probably like 2014 or 2013 or something like that. All right, so stocks to watch. Let's start with the big boys. So Nvidia. Let me turn on the pattern rack. It's building a base, not a great base consolidation, but it's fine. It's kind of doing its thing. And the elephant in the room is earnings due in 12 days. So last time earnings kind of built into the stock. I don't want to say gap down, but it went down. This one, you got a gap up. This one didn't do a whole lot, right? Went up, went down, went nowhere. This one, you get a little gap up. So I would be a little weary if it had, gapped up 3 times like this going into the fourth one. I do own a little bit of Nvidia, not a whole lot. I like to buy Nvidia on pullbacks. So I'm more of a buyer in here and a seller in here. And unfortunately, I might give back some part or watch it go up without me for a handful of days to weeks, but that's okay because I'm gonna stay with it and buy it on pullback. So I don't know how I'm gonna handle the earnings, but if you're in Nvidia, it's done nothing wrong, and then you just have to decide how am I going to handle the earnings report. CrowdStrike is interesting. Again, another big consolidation, not a great pattern. One thing about CrowdStrike, doesn't build a lot of great patterns. So you have to kind of live with that. I think the way to buy CrowdStrike is on pullbacks like that. I think I bought, in fact, I know I did. I bought CrowdStrike somewhere in there. I think I bought it. If it wasn't in there, it was in here. I don't think I had the heart to buy it there, but I think I wanted to. And the reason I didn't is because I remember I didn't. The earnings were due. I think this is a gap down because Palo Alto gap down in earnings. So you have earnings about a month. So you have a month out to look at this. And this company is best in breed as far as fundamentals, which is why I always watch it. And it's kind of a go-to one. Look at the earnings line. Look how kind of steady and powerful it is to the upside. Let's go to how about Meta? Oops, META daily. The gaps down on earnings. So, on the surface, a good report, but maybe they said something that they didn't like, and it was. Look, the stock had made a huge move, so it was due for it. It was, it was allowed to do that. I don't know. I think if you own it, you just leave it, do nothing with it. And if you want to buy it, I guess you could have if you're stalking the name, buy it like that on the weakness. Kind of difficult to do, but it's best in breed as far as names. ServiceNow. So you see, like a lot of these are building these really sloppy. It's not a large consolidation. It's only 16%. That's not that bad for. You see, this one was 14, so it's not that bad. 16% as far as the base. The earnings very strong. There's another best in breed company. Now you have some of them that didn't work. So you have like ARM, which the earnings were really good, and stock it's okay, but it got hit so hard after the fact. If you get this type of action, I don't know. I don't know how you don't at least sell some of it. I couldn't sell the stock fast enough. Of course, it was up big as soon as I sold it, but you get that kind of action, you just have to know that you're probably looking at a large consolidation at best. And or what's happened here. You've given back most of the gains. A-Lab, which is had this really great day. I remember talking about it, and I thought it would gap down the next day, and it did, but then it didn't stay down. I was hoping it'd stay down for a couple of days, then do that. But it went up, and it's just really volatile, tough stock to own. So I sold it. I decided I was just gonna move on from it. IPO bases are tough, and I know for a while this was an IPO base, but it's just gotten too sloppy, too wide and loose. So this probably just needs time. Really good report earnings wise, but it probably needs time. So it's on my radar, but I'm not in that one and don't have any interest in going to it too quick. AMD. So again, you get something like that, you probably want to take some off just in case. That's that's 70 points ago. Hard to believe. What is that? 30%, 28%, 33% off the high. And it's kind of not as good as it once was, right? Okay. How about outside the tech area? Infrastructure, VST. This one is incredible, and just kicking myself that I don't own it because Druckenmiller, Duquesne Capital has a position in this. So I don't. You get the ants, but I like to buy stocks that have. When I see these ants, I want to buy the pullback. So I should have been a buyer somewhere in here. I think it just was hoping it would pull back a little bit more. But I also owned CEG already. So, but this one is just gosh, best in breed VST. So they've got this in a different group. So I don't know if you know how they're similar, but they feel similar. But I owned this one because it had this super strength and then went sideways. And so I own not as much as I used to because I actually sat through most of that flat base, which is very unusual for me. But you see, it was only 11%. It wasn't that volatile. So, but even for me, sometimes they can wiggle me out. But I was able to survive that one. So then when it broke out, is probably well, I was a bit of a seller into that strength. So this group is really strong. I think there's others like Power, PWR, ETN, and they're all in different groups, but I'm kind of grouping them all in like the bigger picture thing of infrastructure. Eris, which is water. I do own this, very strong. It's just a lot of places to look. TDW, the NVIDIA of oil stocks. I don't own it. I don't know why. I've messed this one up. Had a lot of conviction in it here, but kind of this action here, and I just lost. I took my eye off the ball, which is what these stocks do, right? They shake you out, or don't they? Well, it's got a rhyme. I need the rhyme. They wear you out or they scare you out. So this one, if it doesn't scare you out, it will wear you out with all the moves up and down, just wear you out. And then when you finally can't take it anymore and you say, oh, whew, I survived, I'll sell it. And then it runs. So fundamentally, it's great company across the bottom. Weatherford, right up there as well in that area. POWL, I forgot about that one on the kind of infrastructure equipment side and building a cup with handle. So you have a potential pivot. It's a little thin. I've been in this one before. It's a little thin, just so you know, but I'm going to draw like a little trend line here. And I don't know if I'm going to buy like that, but I definitely want to know if it breaks that trend line. And fundamentals across the bottom. I think, another one that came across my desk I hadn't seen too much about, but Camtech. So gaps up on earnings, made a pretty good move before that. So another newer, interesting name. I did mention CEG. Oh, and last but not least, SCCO. I do own, so copper. It's consolidating. This is, as long as it doesn't make a new high, okay, this is going to mess up the pattern. So this is not going to be a flat base because it snuck up there below 120.37. And today it kind of, it almost got there, but it's got the spirit of a flat base. I'd really love it to do more like that. And then I would be, I think I could get more aggressive in it, but I do own this one. All right. So that's it for stocks to watch. Let's go to the quote of the week. Dan Rasmussen. I saw this on YouTube. I think he was being interviewed on YouTube, and he says, I find markets endlessly fascinating. I love, just that alone was enough to grab me because I agree. If you have an intellectually curious mind, the scope for research and ideas. I also love that you're betting on ideas. I know some people might not love that word betting, but you get the context of it. You're putting your money on the idea. You don't, it's not an all or none. Like if I bet on the the Nuggets, it's either win or lose. It's not quite like that in investing, but the idea is the same. Thought often about going and becoming a professor or something, but what I don't like about that is who cares if you're right or wrong? There's no stake in it. I love having a stake, like skin in the game. I talked about earlier. I wanted to bet on ideas. Love that about investing. There's always something new to study. You're always surprised. You're always wrong about something. So it's a really great quote about if you're new to this, what to expect, and if you've been in this game long enough, what we go through. Right? You're always surprised. You're always wrong about something. There's always something new to study, AI or whatever it might be, and you put money down, and you're either right or wrong, and it's very black and white. If you're not to pick on lawyers or anything, but if you're a lawyer and you try a case and you're unprepared or whatever, and it's hard, it would be hard to know if you did a good job or not. You might know, but no, I wouldn't know if I was just sitting in the courtroom. So when you're putting your money down, it's not perfect, of course, but you got that scorecard. You're either right or wrong. And one thing that Steve Eisman says, I really like. Steve Eisman was one of the guys from The Big Short. He says, in this business, when you're early, you're wrong. There's no such thing as early. Some people might say, "Oh, I'm early," but I just agree. I agree with Steve Eisman say you're wrong when you're early. So that's why you get that feedback from the market. Uh, so I and he's done other podcasts and interviews, and on a side note, I like to listen to his style. He's a value investor, much different probably than my style, but the thought process is what's most important. I listen to all these guys interviews on whether it's on YouTube or podcasts or anything. There's nothing you couldn't possibly learn from somebody, no matter what their style is. I think you could pick up something about how they think about investing, how they think about risk. So I really enjoy listening to these interviews. Okay, contact us 800-831-2525. Email is marketsurge@investors.com. Have a great weekend, everyone, and we'll be back next week. Thank you.